Profinium Group. In a moment we're going to be joined by David Wu as well. Alpesh, is today's sell-off significant? We've been seeing this sell-off gather a bit of momentum out in China over the last few weeks. Europe and the US beginning to play catch-up now, you could argue. Is it profit-taking? Is it top-slicing? Or is it something that's going to maybe take us down and maybe retest those lows?
The last thing that you mentioned, it will retest those lows. We're looking at least 20% down to the end of September. Last time I was on this programme, you accused me of being a bear.
Yep.
And
maybe not such a bad thing.
Well, no, not given the environment we're in at the moment. I've been saying for a while, over the last couple of months, that we will be going close to those lows if we don't break them, but I think we'll go close to them. We're not out of the woods, says the bear.
Yeah. It's appropriate.
Alpesh, it's curious that we get the move in equities that we do after the reading of Japan GDP, which I think all of us would have assumed would have been weak at best, and the mechanics of the Japanese market are woeful. You just have to wonder, though, a market that gets so ahead of itself without leverage must be making some serious misinterpretations about earnings potential, because it's not like this is an overcharged sort of investment condition right now. It's almost dollar for dollar. So if it pulls back the way you suggest, that really says our misunderstanding, really, of a lot of the mechanics that we're looking at, both in financial markets and the global economy.
When you look at the earnings figures, and before I came in, I was looking at earnings projections, and we've seen that a lot of the rally had its base in better than expected earnings. So there was some solidity there, there was some reality there, there wasn't a misinterpretation as such. But that then led to, you can call it momentum trading, you can call it non-fundamental based trading, call it what you will. That led to that rally being based not on the underlying earnings, i.e. we say we got overextended, we got too excited, whatever it is. What happens now is, whether it's top slicing, profit taking, whatever that little bit of a move downwards is, you'll then get the people who are not just profit taking, who are saying, well, actually, we're fundamentally bearish. We're fundamentally bearish on the US budget deficit, on their trade deficit, on the state of their economy as a whole, on their unemployment levels, and therefore we're fundamentally bearish, aside from one or two bright spots, on the rest of the world.
I want to put a question to David in just a second, but there are people out there that missed out on this rally that are thinking the opposite thing, that are saying, actually, we've missed out, we need to get money in. Won't they be saying, well, we've been waiting to buy on dips, that's what we're going to do now?
I don't think there's enough of those out there. I don't think the long-only fund managers are thinking, let's all get in, this is it, and now we've got an even better opportunity. I think there's still a lot of apprehension, particularly when the market falls and our short-term memories aren't that short.